outcome? What if I change my expectations? Will I feel differently about it? If I change my expectations, will I feel differently about it? Is there anybody in this room? Does anybody who trades? Let's put I don't think I've ever met anybody who trades who hasn't at least gambled at some point in their lives. Right? What do you expect when you put money into a slot machine and push the button? Good. Well, one of those answers was goodbye. I like that. What else? Loud. If anybody's going to say anything. What are you expecting? Really? On this one? Seriously. What do you expect? You know what you're expecting? You're expecting something to happen, right? You're expecting the wheels to turn. You're expecting something to show up. Now think about what I'm just saying. Because you know what? What I just said is exactly what I expect when I put on a trade. I'm expecting something to happen. I don't know what. But over a series of trades, if I do everything right, I'll make money. Because I'm managing my expectations on each one of these trades. I'm managing my expectations so that I do not have the potential to define and interpret these up and down ticks, the information the market gives me, in some sort of threatening or painful way. Because what I'm going to tell you, what we're going to get into now is the effects of that. When you put money, what's that?
How realistic then is that 65% on your methodology?
What do you mean, how realistic?
70 or 80 or 50?
Go ahead. No, take the microphone.
How realistic is a 65% win ratio on your methodology?
I'm not understanding the question. How realistic is it?
Well, if you can't go by any individual specific trade, but you say over 20 trades, you can say you expect to win 65% of the time.
Correct. They're based on past performance.
Okay, but then again, looking at over any individual 20 or 50 samples.
Alrighty, folks, SPDas is patiently waiting here. Just about to get started. SPDas, the trading floor is yours.
Okay, thank you, Igor, and once again, a warm welcome and morning, everyone. It's about 5 minutes past 9:30 Eastern, and let's get started. The correction continues in the euro, another 10-15 points lower from where we left in the previous session. So it's a double zigzag or a WXY. I can see 3, 3, and 3. Ideally, this can be put under the category of a combination right now. Now, the combinations are again of different shapes. This is a W, X, and Y. If it chooses so, it can create or form another X wave and another Z wave. So it could be a triple 3. That would be labeled as W, X, Y, X, Z. Right now it looks like W, X, and Y. All right, a push above 75 or 75 would confirm that a bottom is in place now. All right, and on the other side is already confirming with a kind of bullish divergence on the hourly chart. So in fact, we've gone ahead and taken longs in the portal, Euro USD, dollar, not dollar index, but pound and gold on the short side just a while back. So Euro USD, if you are still wanting to add, then this is a good price to do so. I mean, another price where we are waiting for a limit order to pass is around the 320, 350 zone. But this one looks like a promising place where we can add long positions to remember we took partial profits earlier, and it's giving us another chance. It's also hovering around the previous wave 4 of one lesser degree. So possibly we are good to go long here as well. All right, and the RSI again confirms a bullish divergence. I think it's there on the 15 minutes time frame as well. Yes, it is. So it's just a matter of time before bulls should be back in control and should be pushing above 500 mark. Possibly we are going towards 586 in the near term. All right, that would complete an ABC, and the path going forward could be 5 waves lower or 3 waves lower, which remains to be seen. And I think we are getting closer to what we decided that maybe probably next week could be the right time where euro could form a major bottom to resume a rally, in March, the entire March series on the upside. All right. So okay, the stop loss again remains around 1.0200. Possibly you can place around 1.0150 if it suffices the risk reward ratio and also falls under your risk management, of course. And the targets are well poised towards 750 and 1.1. 750 and 1.1. Okay, that's the story for the euro. Let's pick up pound. Pound is also kind of carving a similar story, but if you look at the retracement, it is nowhere near to what Euro USD has done. I think it has completed a triangle, 5 waves. Let's see on a smaller time frame. I think we can identify there. We've got A, B, maybe C. So either a flat is complete or a combination is complete. It could be an ABC, the 333 actually. That could be a combination. At least now it looks like a combination WXY. But if you look at the depth, it is very shallow. It indicates bulls are quite a bit in control and they don't want to give it up easy for any kind of deeper correction. All right. So trading point of view, please hold on to your existing longs, and if you want to add, this is not a bad place to do so. A very shallow retracement on the RSI as well, just around the 58 mark, nowhere near 40. But the next target could be 2800 in the near term for pound, and after a pullback, it could push through even higher levels. Actually, we are targeting 1.3 if I'm not wrong. 1.3, yes, 1.3 and 1.32. So stop loss for the long positions remain around 1.23, possible not even 1.23 but 1.2250. That should be the minimum cutoff. Ideally, I like to place it around 1.21. You know, the signals that's being issued on the portal. But this remains firmly bullish. You talked about euro, you talked about pound, we are firmly bullish. And for our time frame, we must see, we should see maybe if not a high, if a bearish divergence is produced, then quite similar to what we are projecting for euro, we can expect a predicted decline next week, which will be a bottom for the first rally due in March. let's go to the dollar index now. Next one is the dollar index. Wave 4 still continues to probe its resistance. All right, here's the 5-wave decline followed by an ABC rally, and a potential ABC decline is underway. You never know whether it's an ABC or a third wave. We are just presuming right now with an expanded flat structure on the horizon that this could be an ABC. But if it's not an ABC and if it's a third wave, mind you, sir, it's going to go straight lower without even breathing, without even giving us a chance. So it's better to add positions right now. I'm going to issue another sell call, another sell call right after the session is over or just after a while, around that 106.95, 107 zone, with a potential short-term target of 105, but it's actually going much, much, much lower, possibly towards 10, 102 and 100 as well. In fact, if we go on a daily chart, then ideally prices should go below that mark, 90, whatever it is, 98 or 99. See, we've got 5-wave down, correct? 5 down, followed by 3 up. Now, a minimum requirement for the pattern to complete, because since it is a 5-wave decline, the pattern is incomplete unless another low is print. So it's a rule that whenever you have a 5-wave movement, normally you're going to see another 5-wave towards the direction of the trend, which exceeds the preceding low or high. So we should see a print at least below 99 for this corrective or whatever structure to complete. All right, so dollar index on the south side, we are just expecting a complex correction, just like what we saw. I think we explained in the last session as well, where wave 2 kind of unfolded as an expanded flat, and you see that expanded flat structure kind of working out here as well. All right. Wave 4 of the sub-minute degree just shifted on a bit right hand side with the lag of time, and I think we are good to remain on the short side, brothers. No worries at all. In fact, we could also shift this path a bit more and give it some more room for the 5th wave decline going forward. All right, sir. So in fact, these three are extremely, if we categorize euro, pound, and dollar index, these three are extremely high potential trade setups. We can have a look at dollar JPY, but I think it's still not there. It's still not there. I mean, we were expecting a counter trend rally to materialize, but it's giving up. It's giving up quite a bit. It doesn't mean that it's going to go and print a new low. In fact, this arrow, you can remove this arrow, because since it's a 3-wave rally, the correction normally goes. Sorry, I need to put the power on. Okay, the corrective wave, since it's a corrective wave, it retraces almost completely. So nothing wrong in that. But from here, we should see a rally materializing, and that channel line is of not relevance right now. We need to do another channel. And that's going to be quite a bit flatter. So a previous wave 4 of one lesser degree somewhere in this zone, I think we should be good to sell if prices rally through that area, 155, 156 kind of a zone. But it's not advisable to buy right now because that is a complete no. Any strength in the dollar or index or the dollar crosses ideally meant to be sold, not to be bought. Any rallies are to be sold here. In anticipation of a rally, if we buy, it won't be it won't be towards the trend. It could be against the trend. All right, so we'll wait for the dollar JPY to reach through the 155, 156 zone. That is absolutely perfect. No problems. Gold keeps testing and retesting our patience, isn't it? But that is what it is all about. Now, if we go by the 5-wave decline, then there is nothing to worry unless prices break above 2942. All right, it's either forming a triangle or it's done the second wave and the third wave is unfolding or subdividing into an extension. And that's what we have proposed here. We have proposed an extension of the third wave, but the second wave within the extension is going much deeper, which normally could be the case, which normally is the case in gold, and in fact sometimes silver as well. I think silver, we haven't seen the chart at all. Sometimes what happens is the clarification which we don't really get in one of the metals is found in the other one. Let me, please give me a moment. Let me straight away go on the daily chart first. Okay, so all right, that was a triangle, wave 4, consolidation, and then a breakout from that part. Our first impulse, the second wave. We are still a long way to go. The only thing is because we've just had wave 1 and wave 2. That could be 1 of 3, 2 of 3, again another lower degree 1 of 3, and possibly 2 of 3. So a corrective decline seems to be underway in silver as well. Of that particular rally, this particular rally. You can count 5 here. All right, and that is correctly done. Ideally, we should see a corrective decline, possibly within the somewhere close to the 4th wave. And if that is wave A, I think we are looking for a good corrective drop with an A, B, and potential C down there. The degree needs to be changed to minute. silver may not be a huge downtrend, but at least wave C would be unfolding anytime soon towards the 30 mark, 30 mark, right? Okay, so if silver is poised to drop, I think it's not too far, but the metal should also begin resuming lower or carving a top here. It's quickly pushed to the 78%, and this is what is the beauty of gold. We've got to hold ourselves on the short side with a stop around 29.55. We're not changing the direction for now. It is still considered to be a wave 2, and we wait for a wave 3 turn lower. All right, the targets are around the 28.10 and 27.60 respectively. All right, we can now touch base with Bitcoin. I think Bitcoin was just beginning to turn higher. Yes, it went up to what, 96? Okay, so let me zoom in. Now that could be the first wave up or first wave higher, a corrective decline before the third wave could resume its rally on the north side. I think we are good to remain long in Bitcoin till the time prices stay above 89 going forward. But there is still room to go. There is still enough time for Bitcoin to cut loose on the north side of that resistance trend line. It is around 101 there. All right. But the good part is that Bitcoin, we need to stay long, and we can stay long without much doubt. Solana was also bottoming out. Let's see. It has bottomed out. That's a good sign, but it's a corrective decline which is underway right now. No, sir, I don't think it's an impulse. If we consider this rally as an impulse, yes. Okay, we've got the first wave and then a corrective decline. Wave 2 expanded flat is in the making. But for this to hold, let's have a short-term target. Remember, we got tipped out. We again got around the long side, 167. Stop 150. And the near-term target for Solana is 183. You might want to keep that in mind, 175 and 183 on the long side. All right. So we're not changing anything in terms of direction in all the instruments we have discussed. The only a bit worry looks to be in gold right now, but this is what it is. Till the time prices stay below 29.42, we ideally should remain on the short side. All right, sir. So let's bring the current session to a pause here, and we'll be back again after a few hours during the Tokyo-Sydney overlap. Once again, thank you for tuning in, and back to you, Igor. Thank you so much.
Awesome. Thank you, SPDas. Always a pleasure.
Thank you.
Forex Lens gives you the edge. Forex Lens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. Forex Lens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with Forex Lens. Check out our performance at forexlens.com. Get the edge on trades. Your eye into the markets. forexlens.com. Forex Lens.